The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. If you have a chance, go to the TFNN website today, www.tfnn. They're having a special promotion celebrating the 600th issue of Tom O'Brien's newsletter on gold. And folks, nobody knows gold better than Tom. He's probably the master of it. But it's something you ought to take a look at. So if you get a chance, go and see what's happening. Well, we are coming down, and we are setting over. I posted into Tiger TV the Bradley model. Yesterday it looked like we were going to hold. On Monday it looked like we were going to hold the 786 in the Dow Jones, and as I mentioned then, that if we didn't, we would be coming down, sharply into these aspects that we have forming this week, and they go all the way out to Friday, and so that's 2 more days plus today. What I'm looking for is a big reversal type day where you were down hard and then close up on the day. We've been down a little bit, but not hard enough in the S&P. I think the S&P has to close above the 1655 level, and then I would think that the possibility of a reversal would be there. So I'm very bullish at this time in the market, folks, and you don't hear that from me very often. I was very bullish, the day after Thanksgiving, and I was very bullish in January. But this is a very interesting pattern that we have happening now with all of these aspects coming together, the Bradley model coming together, prices coming together. Today's low in the Dow Jones so far was the exact 50% retracement of the low we made in February. That's a pretty good sign. The NASDAQ, of course, and the Russell have not even come close to those numbers. So, that's what we're, really looking at. Whether it's going to happen or not, we'll have to wait and see. But I'm waiting for a close above 1655, and then I would have a pretty good idea that maybe the bottom has been put in. Now, one of the things that I look at, and I respect Basil Chapman as much as I do anybody in this business, and he uses it quite a bit, and it helps sometimes it doesn't, and that is the VIX index. The VIX index, we were talking about it just a few weeks ago during the time at the FOMC meeting when the VIX was down at the 1280 area, that it had the potential to get up into the 20s, and today we're trading at 2067. Now, we have not taken out the highs of yesterday, which is unusual occurrence, a slight divergence, I might add, because it's only a few cents away. You could do that in the next 10 or 15 minutes. But the fact that it hasn't done it yet could be something to tell us that this might be the spot of where we're, looking to see a bottom in the stock market, because fear has definitely come back into the stock market, and the VIX index has gone from 1250 to almost 21. Well, it did hit 21 in a matter of just a few weeks. That was from the full moon that we had on the 19th of September to the new moon that we had on the 5th of October. So we've got just a lot of things happening. The aspects that we're looking at, I've talked about these before, and I think I should put them into the Tiger TV, let you folks look at them. This comes from my colleague and my co-writer of the new book on financial astrology, Shane Smulyan, and Shane has a website, wolftrader.net, that he has, and he's helping me write this book on astrology. He's excellent in computers, and what we've done is we decided to test some things, to see how they hold up over time. We know already that, but we're putting the statistical data together to take all guesswork out of it, so that people ask about whether some of these astral cycles work or not. They'll be able to go to the book and see what's happening. And the one you're looking at, if you have a chance to go into Tiger TV, is the one where we're talking about the combined transits. That's basically talking about the Pesavento index, where you have so many aspects occurring on one day. It's very there's a lot of those, that like 14 or more. And if you have 3 or less, that's also very important. And that's what we have occurring on the 9th, 10th, and 11th of October. That's today, tomorrow, and Friday. They're all coming together, with the bulk of them coming in the next, today and the next few hours. So this should be really interesting, what we see at this point. There's a lot of talk in the financial press about the market has the potential to have another crash into October 19th. That is certainly a possibility. However, I don't give that a very high mark, but it certainly could happen because, crashes happen about once every 30 years or so, and we are just about 26 years into the last crash. But I don't be looking for those, folks. That's not a smart way to trade. They happen occasionally, but it's not enough to really plan on it. And I got lucky on the first one, and that's the bottom line. If you have your choice between lucky and smart, always pick lucky. That's the best thing to do if you're doing that, in my opinion. Now, I wanted to talk a little bit about these transits to give you an idea, what they mean and what these aspects are, because this was the work that was done by Dr. Barr at Yale University. Sorry about that, Princeton. At Yale University, and what they're talking about, and aspects polarity means whether it's positive or negative, and these are broken down into positive aspects are the 30 degrees, 60 degree, 120, and 150 degrees. The negative aspects are 45, 90 degrees, which is similar to the 45-degree angle that Gand used, and the 180 degrees, which is nothing more than the opposition. That's the equivalent to a full moon. And the positive or negative are the 0 degrees, which are your conjunctions where all cycles stop. So each one of these, when these planets connect, have either a positive or negative energy associated based on its electromagnetic values that Dr. Barr from Yale University gave it. So if you take those and you add them into a siderograph, which is like what the Bradley model does, it gives you an idea of whether it'll plot what the stock market is supposed to do. So what we're doing is we're doing work like this along with the lunar work using full moons and new moons, and there's some real startling statistics. And unfortunately, it's not 100%, but it's a whole lot better than flipping a coin, and it does work. And when it works, it's almost like magic. But unfortunately, even the great Magic Johnson had some bad days in his basketball career. And so you just don't know, which ones are going to work and which ones aren't. And that's why you have to use, some good, solid money management techniques. Now, I think I have to talk a little bit. I want to switch gears to talk about Forex for a little bit, because we have something very exciting happening in the Forex market with the U.S. dollar. First, I want to go to the British pound, and then I will move to the U.S. dollar and show you what I see happening there on the dollar index. But as you can see on this chart of the British pound going back just about a year, that whenever you have these big, wide-ranging, long bar days, either on the downside or on the upside, it usually means a continuation pattern, and that's what we have happening now in the British pound. The British pound, it broke Friday, of course, and then over Monday and Tuesday, it was able to rally a very meager 38%, the equivalent of about 90 pips. And then it broke down below Friday's low, and it started to accelerate to the downside. That means it looks like it has more to go. Whether it goes today or not, I'm not sure, but over the longer range, it looks like the British pound is set up to go a great deal lower. There's a potential for that top that we just made is almost an exact double top to where we were in last December, and so that's another thing to keep in mind, when you're doing that. Since we're on Forex, I wanted to put the chart up of the U.S. dollar index, and basically what you're seeing there, if you get a chance to go into Tiger TV, you'll see around the 2nd of October and to the 3rd of October, the market made a very nice 3-drive to a bottom pattern down around the 79.70 level. And then the market rallied up and then made a perfect Gartley retracement yesterday on the 8th down at the 79.90 level. And now what it's done is it's completed that ABCD pattern that ended up at around the 80.30 level, and we've gone above that already in just one day. Now, if we know anything about these markets, and that is, and sometimes we know less than we do or think we do, if the point C comes out at very, very strong, like we've done in the U.S. dollar, the AB leg is not going to be equal to the CD leg. The CD leg is going to be an expansion of the AB leg, usually by a factor of 1.27 or 1.618. We're already past the 1.27, so that means that we're probably expanding in the U.S. dollar index into up around the 81 level, and that tells us that we have lower to go in the euro, because that's 53% of the dollar index, and if you add in the Japanese yen, that's another 5 or 6%. If you add in the British pound, another 3 or 4%. You're talking better than 65% of the time, or 65% of the weighting in the dollar index is based on the euro, the pound, and the yen, which it should be. Those are the larger economies of the world. Then you add in, Australian dollar and Canadian dollar, and you just about covered it, because of these other countries like Switzerland and the Netherlands and New Zealand, they really don't bring much to the table when it comes to that index, as far as what you're expecting it to do as far as a weighting basis. So it's basically the euro 53%, and then the pound and the yen, and that gives you the remainder of the things that you're watching. So we're over some major stuff, folks. That's all I can tell you. And what's going to be interesting is if we do get the move here and it goes into the October the 11th area. It's October 11th to 19th is when the Bradley model would be topping, then that would be good. Now, if you look at that Bradley model really closely, you'll see that, it gave a first high in May, and the Dow did go down from May to where it is now. I mean, it's much lower than it was in May. However, if you look at the S&P 500, it's back to where it was back in May. If you look at the NASDAQ and the Russell, they're far, far above where they were in May. So the NASDAQ and the Russell are far, far more bullish than the Dow Jones and the S&P. So if you're getting ready to see a market turn, you might want to look to the NASDAQ, because that might be the one that would turn before the rest of the market does. So, right now the NASDAQ's down about 25 points, which is a substantial amount, and the S&P is only down a couple of points. So there's a big difference in those right now, but we'll see. All I can say is it's a numbers game, and the numbers are telling us that this is where you want to be taking a look at the stocks from the long side, at least for the next month. If in fact this model that we look at, this Bradley model, is going to work, that will tell us, pretty much, that's what we're looking at right now. Okay, we've got to take a little break here. When we get back, I'll be happy to answer any questions.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we had a question during the break, and that is, am I expecting the market to go to new highs if, in fact, this low that we're looking at is going to happen? I do not know the answer to that, but fortunately, nobody else does either. So all I'm going to do is react to what happens when we get to the second week and second and third week of November, because we could very easily be making new highs because of the strength that we've had in the NASDAQ and the strength that we've had in the Russell. I'm going to post into Tiger TV the New York Stock Exchange Index, which is the best way of looking at what the real market is doing, because that's well over 6,000 issues. They're all cap-weighted, and it's a worldwide basis of what really the stock markets are doing. And if you look at it closely, you can see that yesterday we closed just a shade under the 61% retracement. We made a little bit lower low today, but we're still hovering around that 61% retracement, which is around 95.17, so we're 30 points away in the New York Stock Exchange Index of closing above, the 61% retracement. The problem that we have on a timing basis is this is the 9th of October, and this could stretch out all the way into Friday, and it could also fail, and nothing could happen. But this is one of those times where you have Mother, God, and country all coming together, that it's either going to stop very, very close to these levels that we are now in the next few days, or we're getting ready to melt down big time, and that would make it very, very negative for our economy. I think what's happening in Washington is just cannon fodder. They're just basically just playing games, and they push the stock market down to bring in the fear and greed, just like they did during the TARP thing when what's his name, Paulson, came up and said we have to have $773 billion to help out our friends at Bank of America and Countrywide and Goldman Sachs and whatever. But that's how they do it. It's not a mystery. I mean, they do it every time. It's just every time we have something that has something that's too big to fail, they bring it up, and that's pretty much it. Now, I wanted to show you folks, if you get a chance to go into Tiger TV, to show you just how bullish the NASDAQ chart happens to be compared to the Dow Jones and the S&P 500. The NASDAQ, when you overlay the Bradley model on it, I mean, it had the original correction that lasted into, I believe it was around the end of July. Yeah, it was on the end of June. And then after that, it went straight up, where the rest of the market just went up and touched the high and then made lower lows like we're coming into now, into the Bradley model. But the Bradley model was not built, the Bradley model was not built on the numbers of NASDAQ. It was built on the numbers of the Dow Jones Industrial Average. And so that's what we do, because that's how people report, what the stock market is doing. If you ask somebody, what's the stock market doing, the usual fellow on the street, they're going to say, oh, the Dow Jones was up or down that day. Well, the Dow Jones, it just doesn't work very well as what the market does, because it's only 30 stocks, and they're not cap weighted. They're price weighted. So the price of Hewlett-Packard is the same as the price of IBM, and IBM has 10 times more capitalization, at least 10 times more capitalization than we have with the other market. So that's what we're keeping an eye on, when we're watching these different entities going, because the correction that we've had now, we've been down for 7 days now in the NASDAQ, and it's been very, very minor. That doesn't mean we can't come down a whole lot more, but it's just saying that the probability is such that if, in fact, these aspects are coming together, these cycles that we're talking about with the Bradley model, and we're at near major support in the Dow Jones. Now, the Dow Jones has matched the lows that it made in August when we had the we had the new moon on August the 6th, and then we had the full moon on the 22nd, and that's where it bottomed. We've gone in the Dow Jones, we've gone down to touch those lows. The other market hasn't even come close to that. See, so that's telling us that the Dow is not a really good indicator of what's really happening in the market. Now, that's my opinion, of course, but that's how I see it. And whether that's going to be the name of the game or not, we'll have to let history tell us if this is going to be a bottom or not. On a probability basis, this has a really high probability of being a bottom. But boy, folks, like I said before, it's a probability. It is far from a certainty. Someone asked me if I had to rank this on a scale of 1 to 10, I'd have to give it a Mary Lou Retton. I'd have to give it a 10 right across the board. So that's all I can say. We're going to take a little break here, and we'll be back, and we'll discuss more about the foreign currency markets and also the bond market.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, and Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, the next market that I want to look at, to me, is one of the most important, and that is the euro versus the U.S. dollar. We've already discussed the dollar index, the fact that it made a pretty significant bottom yesterday. It's had an expansion move today. And now the euro, after the action that we had Friday, it completed the 5-point reverse wave exactly at the 1.618 expansion at that 136.50 level. It didn't take the high out of 137 from January 13th. And now with the two wide bars down yesterday and today, that's telling us that most probably will be heading lower. If we can get the euro below the 134.90 level, it's trading at 135.11 right now, that would be an indication that we're getting ready for a pretty significant move to the downside in the euro. That's the way it looks. And, of course, we've looked at the British pound. It's already telegraphed that that's what it wants to do. So if these markets start to, catapult to the downside, this would most probably be the technical reason for it. The fundamental reason, I have no idea, but the technical reason would be that it's breaking these major support points, that we're looking at. So it's going to be an interesting few days here with these aspects that are coming in. You're going to see a lot of fireworks. We've already seen some just on Monday, Tuesday, and Wednesday, and I imagine we're going to see quite a bit, even on Thursday and Friday because of the fact that the markets are very jittery. And the VIX did what it's supposed to do. It's just lining up really nice, folks. I wish I could get put 10 of these in a row like this, but unfortunately you don't get these kinds of things coming together all at once, for the same reasons, I think, whether it's a political or whatever it is, very often. And that's the real beauty of what we're looking at here, is that all of this is coming together all at the same time. Now, at the same time that we're looking at this, if we take a look at the Japanese yen, so we should look at that because we've just had a major bottom form in the Japanese yen, which also telling us, that the bottom in the dollar is also related to the yen, which should mean that the Nikkei stock market should go up because there's a correlation there of better than 90%. So whether that's going to be the case or not, I don't know. All I know is that the cycles are lining up, the prices are lining up, and the BS that we're hearing in the musical front from Washington is lining up too. So these are the kinds of things that we like to see, is the good volatility, and that's the way we want to keep an eye on it. So tomorrow on the commodity report, we're going to have to go over the metals very closely, and also the grain markets, because we just completed a big 786 retracement in wheat, but we'll cover that on the show tomorrow, wheat, corn, and beans, and all the metals to see where they are, and of course copper, because it's been under a great deal of pressure all along for the past several years it has, and so that's another reason why we want to do that for tomorrow's show. Now, someone asked a question about what would be my trigger point today, in the stock market. And I like I mentioned before, if we can get above 1657, 1655 to 1657, that's about 8 points from where it is right now. That would be the first sign that I think that this could be the bottom. The reasoning for that is that we made a lower low than we did yesterday. We expanded down to a little beyond the 1.27, about 1.35. Some of the indices did not make lower lows that we mentioned. The VIX index, didn't make a higher high. That's telling you that there was a little bit of, fear coming into the market, and that's what you wanted to see. So that's a possibility. So all of this is starting to line up that it's getting very, very close, to something that looks, very, very interesting. So the trigger price that I'm looking at on the S&P E-mini futures is, let's put it in at 1657. If we get it above that, and it closes above 1657, then I would assume that the bottom is in, and then we would be able to get a pretty good idea of where we're going to be. Now, someone asked me a question about the Russell 2000 index, and I will try to get this up here because I've had a little bit of data problems with the Russell. I don't know if I can still get it or not. Yes, I can. Good. Everything's cool. Let me get this ready here because I'll be able to put this in here. And I never trade this thing, but I will look at it. And we had a beautiful 5-point reverse wave up at the top in the Russell, and now what we're doing is we're coming down to the we're almost at the 61% retracement level. We just went below the 50% a little bit, so even then it is actually acting pretty good. This is a pretty steep bar down today, but it's still early in the day, and I'm not saying this is going to be reversal day, but there's always that possibility given the fact that these cycles, when they hit pretty good. So that's what we're watching in that. Someone asked the same repeat question again, is how do I rate this? And folks, if you add everything together, what I'm looking at, I'm just a technician. I don't know nothing about Washington. I have a MBA in finance and marketing, but frankly, I don't know how to read reports, and I don't think anybody else does either. But I just look at the price charts. That's just telling me whether things are going up or down. And I look at the technicals. That's all I'm looking at. I'm looking at the Bradley model for cycles, and it's not perfect, but it's the best thing I found. And you can do it, many months or years in advance, so it has to have some meaning. And so that's just telling me that we're really close to, where we should be. Like on May 25th, May 25th, we had a big full moon, and the market was topping, and it looked like a top, and it topped for well over 5 weeks. And if this is a bottom, it should bottom, and it should be for about 5 weeks, if that's going to be the case. If it doesn't work, then back to baking cookies over at Keepler's Cookie Company. But we'll see. Anyway, this is what I give. I give it a solid 10. If it doesn't work, it doesn't work. But give me these trades 10 times out of 10, and I'm going to win 9 out of 10 times. One time it's not going to work, but the other 9 times, it's going to be on my side. So that's the bottom line of what I'm looking at. Now I'm going to switch over since we finished the currencies, and I think we're pretty much agreed that I'm out on the diving board here by myself in the deep water of the commodity markets, and I wanted to bring up something that is incredibly unusual, this pattern that we have in the Treasury bonds. Folks, we have been at the 786 level in Treasury bonds at this 133 level for 11 days. I want you to go back, if you get a chance, and see if this has ever happened again. And the answer to that is good luck. This is an incredibly unusual pattern. I mean, to be in this level here for 11 days and not do anything at all is really amazing. This market is going to have a very strong move one way or the other. It's either going to break out above 134.10 or it's going to break below the 132 level to the downside. We're trading at 132.30 right now, which is very close to the lows we made last week. But you also want to realize that if we only take the lows out by just a few ticks from last week, where the people would put their stops, you'll be looking at a very unusual butterfly pattern. And this is what I've got my eyesight on. This is one of the trades I have for today, is to looking at the bonds, because if we get down to this 132.20 level, we will be taking out the stops of the last 2 weeks. The key to this is what happens at 132.20. If it takes it out with a lot of vengeance and a really long-ranging bar, I'm going to stand aside. But if it just goes down there and knocks out those stops by just 1 or 2 or 3 or 5 ticks and stays there for 15 or 20 minutes, I'm going back in, because all that is what Bill O'Neill called is a wash and rinse. It goes down and sees if there's any stops there, and that's it. And believe me, folks, these markets are not hunting for stops. That does not happen. They happen because that's where the market is going to go anywhere. And I can believe that with 100%, that these markets do not go fishing for stops. It's normal that people put their stops where they were under the lows of last 2 weeks, but that's the wrong place to put the stop. If you really have a long position, you should give yourself a little bit of room. But that's just the way it is. So I don't believe that the market is fishing for stops. They go there because that's where people put their stops, and we see it time and time again that it occurs. And all we're trying to do is profit from it. So I'm watching the bonds here at this 132.20 level and see how it's get there. We're only 10 ticks away, so we'll be very, very close if we get into that ballpark to see it, and from there we'll get it. But let me review, because this is such a real critical day today, tomorrow, and Friday. The things that are really important is if the euro closes below 134.90, we're at 135.12 right now. If the S&P can close above 1657, that would be a pretty good reversal. Those are two of the main things that I'm watching, because money is how you gauge all this stuff, and the euro is the second largest currency in the world. Behind the euro versus the dollar is the largest. It's 53% of the value, so that's the real key thing to watch. And the pound has already given up the ghost, as far as I can tell, to the downside. So all of this is telling me these are the key things that we're watching. And then in the bonds, the key price I'm watching here is the 132.20, because if we close below 132.20 today in the December bonds, that's telling us that 11 days that we've been up at this 786 between 134 and 132.5 was nothing more than distribution. But boy, to see a pattern like that, it is really amazing. Now I know a lot of you folks are seeing on the Bloomberg and CNBC, they're showing that the yield on the T-bill, the 30-year bill, and the 1 week T-bills, these things have gone absolutely ballistic. In other words, the rates on the bills have risen dramatically, and that's just a short-term phenomenon, folks. That doesn't mean very much. When a market has an interest rate of 0.12 and it goes to 0.41, I know that's a huge incremental increase, but on a percentage basis and dollar amount, it's virtually nothing. So that's why you have to take into account, what they're measuring. That's the bottom line of what we're looking at when we're watching these things. So the three things that I'm going to repeat these because they're really important, and that is the S&P above 1657, December S&P futures. December Treasury bonds at 132.20. And if it closes below that, I would think that it would, we're going to go a lot lower. But if it holds, we got a chance to the market to go higher. Longer term, I still think the bonds still have a chance to have a pretty good rally. I want to put that daily chart in here to show you that if we match the rally that this is just really amazing to see this thing at the to see there for 11 days. It is just it's just unbelievable to see the bonds. I've never seen this pattern in the bonds before in all of my years of trading. And when they started trading in 1976, that was the year I started at Drexel, and it was forget that. Anyway, if you see a pattern like this in bonds, bring it to my attention, folks, because I looked and looked and looked, and I couldn't find anything like that. For the last 11 days, the bonds have been in a 1.5 trading range, gone nowhere. They stopped exactly at the 786 of the high from August, and if we can do anything like what we did during the February to May time, that means we could get all the way up to the 136 to 137 level, and so we still have a place to go. What's really amazing is this pattern itself. It is just it really, when I looked at it, because basically I look at 60-minute because I'm risk averse. I don't try to risk very much when I put my trades on. Sometimes I don't do it as well as I'd like to, but lately it's been okay. However, if you see something like this where the market's been in the same range for 11 days, that's 2 weeks. Give me a break, guys. This is a really active, volatile market. I mean, it's far more active and volatile than the S&P 500. I think it does about 8 or 10 times the volume that they do. So, this is big time stuff. Something really big is happening in bonds. What I think will happen is the first breakout will probably be be a fake out, and then the real breakout will happen after that. That's usually what occurs, and that's what I'm thinking is maybe that the fake out will be down to 132.20, maybe 132.15, somewhere in that ballpark, and then when it gets back above 134 the next time, that's the one you want to go with. But that's the way I'm playing it as a technician. I don't know diddly squat about the things from I better post this in the room. I didn't do that yet. Post that daily in to show the 11 days of what it looks like on the chart. It's just really amazing. So those are the bonds. We have the euro. We talked about the S&P. We want to talk about the gold market. I know it's a commodity, but let's do crude oil, because crude oil has had a big move here recently, and we want to show you what's happening with it. If you'll give me a second here, if I can find it. It starts with a C, doesn't it? Shucks, I can't find it. All right, give me a second here. Wow. Something's wrong. I don't have crude oil on my... Did I lose data? Hold on. Give me a second. I'll stop thinking and talking aloud. I'll just bring up a new crude oil chart, and we'll see where we are here. There's one market that I want to show you. We'll take a break here. We'll come back and talk about crude, because I think we got a really good chance of doing something in gasoline futures soon.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I posted a chart of crude oil in the room, and in the Tiger Room, and I just wanted to highlight the fact that we're only a few cents away from the low that we made just recently, just 2 days ago, at that 101 level. If we break that by very much, that's going to take us down close to $97 per barrel. So that's what we'd be watching for, a situation to be looking at this as a potential breakdown in the crude oil market. But it has to get below that 101 level. Right now it's a double bottom, but the fact that it came down so fast after rallying for $4 a barrel leads me to believe that we're most probably getting ready to head lower in the crude oil. And all it takes is just a small selling from here, and that would be pretty much the end of that bull run that we've had in crude oil. So that's what I'm watching in the crude oil. Now, there's another market that I've also, that's the commodity market. I'll cover it tomorrow. That's the gasoline futures. Well, let's just do it now. Everybody uses gasoline, so we should have an idea of what's happening here, because we had a big run in gasoline yesterday, and it had a big move up coming off of a 3-drive to a bottom pattern, and now what it's doing is it's coming down, and it's making not quite a 61% retracement of the move, but it's getting very, very close. And it's going to be interesting to see if it can hold this level where we are right now, because it's it's very, 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 very tempting here from the long side if it can hold a 61% retracement. Okay, I've only got a few minutes here to finish up. I want to repeat the numbers that I'm looking at. In order for the stock market to turn around, from my point of view, that S&P has to get above 1657 on a closing basis. Treasury bonds are going to test the 132.20 level. Those are the lows of the last 11 days. If we close below 132 in December Treasury bonds, most likely this move will go to the downside. The fact that we've had 11 days here in a 1.5-point range is incredibly unusual. I mean, it's an outlier event like I've never seen. And the next one we're looking at is the euro foreign currency, and that is if the euro foreign currency closes below 134.90, to me that would be a breakout to the downside, and we'd be looking at far lower prices in the euro, which means the U.S. dollar index is most probably going to extend even further than it already has in just a matter of 1 or 2 days. So that's the bottom line of the things that I'm following very, very closely. As I've mentioned many times on this show and yesterday, and I'll mention it tomorrow till it stops working, and that is that we are having a really important trading astrological cycle date, whatever you want to call it. Started on Monday, and it goes all the way out to Friday, and we're in the middle of that right now on the 9th, and so it's going to be very interesting this week. This should be a major bottom or major top in a whole lot of different things, folks. That's the bottom line that I'm seeing when I look at all these things. So make sure you use stops when you're trading, because when these things are wrong, they can go to oblivion, and you don't want to go there. That's not a place in California that you want to visit. It's just a very desolate place right outside of Bakersfield, and as we know, Bakersfield is the armpit of California. Happens to be the home of Frank Gifford, but it's still a pretty tough place to live. I think we're getting almost at the end of the show here, and there's no questions in today, so evidently everybody is situated well in the market, and it looks like we're going to have a lot of fun over the weekend. So I want you to live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.